Hello, hello. Okay, let me ask you something. What if your kid could be your favorite employee, but also your biggest tax shelter? Sounds spicy, right? But really, here's the truth. The IRS literally lets you pay your children for your business, but if you do it in the correct way, it's tax deductible for you and fully tax-free for them. Welcome back to Spicy Takes and Tax Breaks. I'm Aubree Denekamp, the write-off queen, and today we're breaking down one of my favorite strategies, how to legally and strategically pay your kids, shift your income from your tax bracket into theirs, but also use that money to build generational wealth. Or even if that's not in the cards for you now, you can benefit what you're already spending your money on to this tax rule. So keeping receipts is compliance. I love to say this, but creating wealth is where the strategy lies. Here's the big picture. If you own a business, even if it's a side gig or hobby, let's call it, and you have children, the IRS literally lets you put your own children on payroll, take deductions for it. And yes, you can pay your child, write it off, or kiddos even. And if you do it correctly, it's completely tax-free, not only to them, let me say it again, but also to you. The IRS allows dependents to earn up to the standard deduction, which is tax-free. Sometimes you don't even have to file, most of the times. But in 2024 alone, that's $14,600. In 2025, it'll bump up to, again, with inflation, probably close to $15,000, if not more. This will increase year after year for anything foreseeable. That means you can pay your children, you can pay them wages through your business, deducted as a business expense, and now your child owes no federal income tax on that money, no unemployment on that money, no Social Security, but additionally, you're taking it as a tax deduction. Fully tax-free income for them, full tax deduction for you. That's what we call a double win here. So let me ask you this. Would you rather hand $5,000, $10,000, $15,000 to the IRS in taxes, or shift that income into your child's bank account where it's completely tax-free? Again, discretionary on how you spend it. Let me get real with you guys and how I use this in my own life today. My daughter, Addie, greatest person ever, absolutely my favorite employee. She's 4 years old. She sometimes models in a photo that goes on Instagram and the website for content. She is in my marketing. Shreds paper is one of her favorites, to be honest, right now. But obviously, she's not doing client reconciliations. She's not entering in tax returns. But the IRS doesn't expect your toddler to be running a payroll or filing tax returns or running a marketing campaign. What they do expect, though, is an age-appropriate, legitimate work schedule in whatever capacity you create that. If your kids are already part of your business, their story is already part of yours, whether it's in the marketing, the reason you're doing your business, on your website, in your branding, helping in the office, coming with you as you drop off mail to the post office, whatever that really looks like in your capacity. If you have kids, they truly are part of the story. Let's talk about that deeper. What does the IRS actually let you count as legitimate work and why? So toddlers, 2 to 5 years old, let's call it. If they're modeling in your social media, holding a camera for you while you walk into a post office or in your office, getting ready in the morning, however that looks, walking out the door, random flower, if that makes sense, stuffing envelopes, whatever, handing out cards in a network. We can get creative here. As we get older, obviously the options expand. Kids 6 to 12, they could be taking behind-the-scene photos for you, helping organize supplies, filing paperwork digitally or in person, paperwork-wise, product testing, random things, taking a look at what you're about to post on TikTok. As they get older, let's call it a teen, 13 to 17, we can now expand into social media management, customer service, answering a phone or an email, passing that along to the necessary parties, video editing, data entry, filing digital paper files, running errands. Again, list goes on and on. So the trick is really, let's keep it legitimate. We want to document it, which is fairly easy after a setup. And yes, you do need to write a job description, which again, we're going to link in the bio of how to do that. There's a million samples you could just use for yourself. But we also want to keep a simple timesheet in case you're ever audited. Again, we'll link this in the bio here, but we want to pay them into their own bank account is truly the trick to all of this, even if you leave everything else behind. This is how we keep it bulletproof. Best part is this truly takes, even if you go to the full mile, virtually zero time to set up. And we're creating that fully again in the free downloadable link below. So there's different ways to pay your kid based on what you're doing, whether it's through your social security number, an LLC with an EIN, or if you're an S Corp. Entities do matter when it comes to this and how you are paying them even more so. So as a sole prop or single member LLC, typically kids under 18 will never pay Social Security or Medicare taxes on their income unless we're over different thresholds. Also, no unemployment tax here either. It's a sweet spot for both you and them because you're paying them as a deduction to your business, which is reducing your AGI, but you're also giving them money, whether it's to spend in daily life that you're already doing or invest into a future. If you're an S Corp, you can make an election to either pay them as a 1099, which we currently discussed. That means their wages are not subject to payroll taxes, FUTA, SUTA, any of those things. But you can also pay them as a W-2 at that point with still all of the same benefits to them that you are now paying a payroll tax into them, which is fine. We can go into that deeper later. It also goes into that deeper in the downloadable link, but it's still deductible with you paying a tax. Again, this is if they're W-2 in your S Corp, not 1099. There are, though, additional investment opportunities for retirement and different benefits if they are W-2 within this S election. So what's the workaround? Some families do set up a management LLC. So even if they are an S Corp, they'll create an LLC for services, and that LLC is actually who hires the kids if they want to keep it out of their S Corp, or let's call it even a partnership with someone who is not a spouse. If they're under 18, payroll taxes is not really a thing unless, again, we're over certain income thresholds. So let's take a look at if they have another job, if that is something we need to take into consideration, if they have dividends coming in for a certain reason, or a disability payment coming from the government. But realistically, we don't need a ton of things here. It's an easy documentation to record. So again, to recap, think of it this way. Sole prop LLC is the easiest, cleanest way to do it. Keep them 1099 under the threshold for a year. S Corp, if you're paying them as a W-2, still good. Few extra steps if you're doing W-2. But at the end of the day, what we're really looking to do is see, hey, should they be a W-2? Should they be a 1099? Why? And then additionally, if there's extra money to spend, where should we be investing it? Trust me, we can really get as creative here as we want. Fully legally, but creative. We want to make sure to follow along with the spicy takes and tax breaks for when we dive deeper into what that looks like, much beyond paying your children, but what opportunities actual entity structuring towards that comes, as well as income shifting that can do for you as well as them. So why does this work so well? Instead of paying yourself or having a higher profit, which means 30 to 40% of that profit or distribution you take in the year goes to the IRS. You can shift that money into your child's hands where they pay nothing on it. So no income tax on that money, no state tax on that money, but it also reduces your income by that amount. Again, you just move money from a taxable column on your end to a tax-free one on them, keeping it inside your family still. Here's where it gets juicy. Once your child has earned that income, you open the door to different investments. You can use some of it for everyday expenses that you've already been covering, whether that's school tuition, activities, camp, vacation, school supplies needed, party favors, whatever that looks like. But the real wealth play in this, if you have the money to expend, is thinking about a Roth IRA for your children, a solo 401k, different things we can do further than that, which we'll get into later. But even if you only contributed to a Roth IRA, let's say, for 2-3 years while they're young, that money has decades to compound. 2 years of hiring your toddler could literally mean over $1 million in retirement of savings for them. So that means I hire Addison, pay her as a taxable deduction, $14,600 from my company, which she's employed by two, let's say from one company in 2024. I put that money directly from her account into a Roth IRA for the next 2 years. We add over $600,000 at a minimum of non-taxable retirement money for her when she hits her 60s. Additionally, from that, we add a second year and compounding interest. We're just about done for her retirement, even if we don't contribute further from there. That's legacy planning. It's in action and basically no cost to yourself when you look at the liability you'd be paying without taking the deduction. So let that sink in. If just for 2 to 3 years of hiring even a toddler could mean your kids retire with over $1 million already sitting in the bank, and trust me, I get it. As a single mom, that sounds daunting. And how is that possible for me? I know not everyone has $14 grand lying around to throw into this strategy per year, but realistically, that's the beauty of it. Even if you're just shifting over the everyday things you're already paying for, which is typically much more than $14,000 a year for a child, specifically a toddler and daycare, all the things, clothes, schools, activities, sports, summer camp bill. I mean, the list really goes on and on and on. If you're running that wage through your business, deducting it as a wage, now your child is able to pick up that deduction and that expense for themselves with that money. This is the stuff truly I wish someone had told me sooner. I went to school for this. I know a lot more than the average person about this, but even as a young person and having my child, I wasn't prepared or strategizing the correct way. The tax code has so many ways to keep wealth within the family and incentives to do so. You don't have to hand it over to the IRS. When you're building a business, working a job, raising kids, trying to meet ends meet, whatever that looks like, the kind of strategy that you can put in place is no longer just a write-off. It's hope, it's a legacy, it's changing the game for not only yourself, but your family, however you play it. So your kid has this tax-free money. What do you do with it? Again, options are endless. We'll have to do a full another podcast going into this. We'll bring on a financial advisor to fully dive into what all of this looks like in current market, as well as projections for future. But quick recap on this would be like a Roth IRA for your children. If they earn income, they can contribute up to $6,500 as of 2024, $7,000 in 2025. This is one of my favorite. 2 years of contributions at age 4 and 5. Again, like I said earlier, can go to over $600,000 minimum, like I said. Much more than that is the possibility, but by retirement, this is wild. You can stop again after those 2 contributions. You can set up obviously a 529 college savings plan, invest for education. You could pass it along. Obviously, with the big, beautiful bill, there's a lot of other options that are coming out now for your kids. Custodial brokerages is a great option, a UTMA, UGMA. It's basically a flexible investing for stocks, EFTs, car fund for down the line when they're ready for their first car. You can also keep it liquid. Like I said, I get it as a single mom. I'm there certain times, but use the wages to cover expenses you're already paying for. Uniforms for school, camps, sports, a vacation they've been dreaming of, a new toy, whatever that looks like. It's incredible the options you have there. So again, whether you're investing for their retirement or using it to free up your own cash flow for the current day, either way, money stays in the family, is a tax deduction, and reduces your liability for the year, not only for the IRS, but is helping you all around. So there's so many different things we can go through next, but really the spicy takeaway here is hiring your kids isn't just a deduction. It's an income shift, way to turn tax liability into family wealth. And even if you're recycling those funds, it's a benefit to everyone, including your kids. Start simple, write down those 3 tasks for your kids. They can do in your business. That's your homework for this week. Don't forget, this is just the beginning. Next week, we're diving deeper into actually how you structure an entity if we want to get more in depth into how to save the monies there too. How LLCs, S Corps, and even trusts can work together or apart to protect your wallet, reduce liability, and ship even more of that income, which is completely tax-free at that point. Again, this is Spicy Takes and Tax Breaks. Subscribe, leave a review, share this episode with another parent, entrepreneur who deserves to keep more of their money in their pocket. Tag me at The Write-Off Queen on Instagram with the first job you're hiring your kids for. Can't wait to hear. Again, I'll also drop the free guides to go over how to pay your kiddos, rules, regulations, limits, sample job descriptions, and intro and investing it all if you want. Because remember, taxes truly are not a punishment. There is a full playbook. And here, we play to win. Keeping your receipts is compliant. Creating wealth is the strategy. Can't wait to talk to you again soon.